on Wall Street. Do you know where your money is? Hi, everybody. Welcome back to the Closing Bell. I'm Maria Bartiromo on the floor of the New York Stock Exchange. This market not being able to get anything going today as the fiscal cliff fears continue to hang over the stock market. The market had been higher going into the close, although, as you see, we turned negative right at 4 o'clock. And in fact, we're looking at a decline of about 13 points right here. Actually, a bit worse than you're looking at on the screen as things settle out. We'll bring you the final numbers shortly. The Nasdaq Composite also under pressure to the tune of 5, and the S&P 500 tonight down about 2 points on the session. I want to take a closer look at what moved the markets today as we await any decisions out of Washington on the fiscal cliff. Joining us right now, Keith Springer from Springer Financial Advisors, Abigail Doolittle, CNBC contributor from the Seaport Group, Dean Mackey from Barclays, and our own Bob Pisani. Good to see everybody. Thank you very much for joining us. Keith Springer, let me get your take on the cliff here and on what's to happen in terms of the markets. Do you expect the economy to go over the fiscal cliff, and what kind of a reaction might we see in the market if, in fact, that were to materialize?
Well, if we saw that, we saw the market sell off in a big way. But I don't think anybody believes, Maria, that we're going to go over the fiscal cliff. There'll be some sort of resolution. They'll probably come up with some tax cuts, some breaks in spending, and probably kick the can down the road on a lot of it. I really believe, I love the way this market is acting. It's not selling off with all the bad news, all the bickering, all the bad words on each side. You've got to love the way that this market is holding up here. It doesn't mean investors need to be carefree. But overall, it looks like the market is setting up. There's a lot of negative sentiment out there. And it looks like there's a lot of opportunity for a big run higher once we get some form of resolution. And I really believe we're going to get it.
And you can always count on politics. You think we're going to get it by year-end? I really do. I think they want to go home for Christmas. And they're not going to want to not go home for Christmas. And I think we should make them not go home for Christmas if we could. But, you can always count on politicians to do the right thing when all other options have been exploited. And they're going to finally get there because they have to. They're not going to solve 100% of it right away. Yeah, but jump in here, Abigail. What do you think? What do you think?
I think it's too early, really, Maria, to be this bullish or even bearish about the fiscal cliff. The fiscal cliff is all about uncertainty. Until there is resolution, it's hard for investors to become too bullish or too bearish in terms of making their investing bets. And I think that if we look back to last year, the debt ceiling crisis, technically the trading of last year was very similar to this year, wide, sideways, volatile range. And if you recall, that was resolved at the last minute, as the last guest was suggesting this crisis may be, and yet the markets broke to the downside. So again, I think it's too early to say that we're going to see a big break to the downside or the upside, but technically I would say that there are more indications that the break could be toward the downside when we look at the VIX, when we look at the Nasdaq Composite, the transports. But right now it's about uncertainty and not making too big bets on,
You're not going to touch it. You don't want to make a prediction
mixed
on the fiscal
signals here,
cliff.
yeah.
Dean, what do you think? You think we're going to go over the cliff? What's your take?
I think it's relatively even odds whether we go through the end of the year without a resolution or not. I think that we want to avoid falling into the trap of thinking that the politicians will get to an agreement just because they have to. They are quite far away right now, and there's a lot of things to resolve. We're not seeing movement. I don't think we necessarily can assume that everything is going to be fine at year end.
All right. So how do you want to allocate capital? You've got to allocate capital and sort of make decisions about folks' money regardless. So what are you doing?
Well, what we think that one would want to be pretty cautious here in the very near term. We think ultimately we will get to a deal, whether that's this year or next year. Then we think that we want to be more risk on. But in the near term, I think one would want to be relatively cautious.
And Bob Pisani, that's what we're seeing in these markets every day, isn't it? Cautious. You look at one way in the morning and it's the other way at night. But it certainly feels like this market is still expecting a deal, as we've heard just on this panel.
I agree.
Otherwise, this market would be plummeting.
I think the market's missed a very key thing that happened today. John Boehner, the Speaker of the House, sent a message that a deal was in the works. He threw several House members off of key committees when they criticized him openly for looking like he was ready to make some deal on taxes with President Obama. That's a sign to me that he's going to clear the decks to try to push through a deal. It's a sign that we're going to get some kind of tax increases for the top 2%. I don't know where the numbers are going to be, 250,000 or 500,000, or whether it'll be 37% or 39.5%. But pretty clear to me that a deal is in the works, and we're heading in that direction, Maria. What I'm not sure of is whether the market will go up on this necessarily.
And in terms of that January effect, Bob, does that even matter this year?
Yes. Look, it's not lost on anybody that January and February are the two best months of the year, and I think that's a factor that's holding things up for sure.
Let me ask you about putting money to work, Keith Springer, because you say we're going to get a deal regardless. Well, we may get a deal regardless, but that deal means probably higher taxes, and it means lower spending. So what are the areas in the economy, in your view, that get impacted most by a deal?
Well, we're going to have less spending in the economy next year, which is going to slow down growth, which is where a bear market will probably come in, but not right away. There's so much negative sentiment in the economy and the markets right now that there's a lot of room on the upside for the stock market. You've got to be careful, especially in dividend-paying stocks. Big believer in dividend-paying stocks here, but you've got to be careful in the ones because if the dividend tax rate goes higher, you don't want to be stuck in them. There's a great opportunity right now for investors looking for income, looking for dividends. Some of the MLPs, some of the healthcare REITs and mortgage REITs are very, very attractive. But of course, if a dividend increase for taxes comes in, you don't want to be stuck holding the bag. So I see a big run up once a deal is made for a few months, but then investors have to be careful, sort of the invest for need, not for greed mantra, where you want to not have all your chips on the table, but just be investing for what you need. So be careful in the dividend area for sure.
We'll leave it there. Thanks, everybody. We appreciate your time today. We'll
Thanks,
see you
Maria.
soon.
Good to see you again.